Welcome back to the Market Matrix, and today we're going to speak about the descending triangle. So in the previous video, we spoke about the ascending triangle, which went something like this. We had price that was bouncing off the same resistance, but each time it came down, it made a higher low each time. So the stock came from an up move, and then had the same resistance. Each time the buyer stepped in, they stepped in at a higher price, squeezing it into this triangle that looked something like this. So in this case, we're going to have something that is quite similar in the fact that the price is being squeezed, and we're going to see which side is pressing the price. So again, with the ascending triangle, we had the buyers pressing the price higher. They kept pressing it higher, 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 and the sellers were sitting at the same level. So let's see the descending triangle. Let's get into it, and we'll see as we go. So we have the stock that runs down, and it's being bought up, comes down again. Buyers step in. You notice over here, the buyers are stepping in at the same price. So if we call this $1 and we call this $4, we see that the buyers are stepping in at 1. Over here, the sellers stepped in at 4. Now let's just continue to see what happens. So the stock gets rejected. It comes back down. It bounces up. It gets rejected again. So we could get a picture in our heads of what is happening. Over here, this price that we called it $1, the buyers stepped in every time it came to that price. And what happened over here, we called this 4 from before. Sellers stepped in over here at 4. They stepped in a little lower, stepped in a little lower. So they're pressing the price lower each time. 4, let's say this is 3, this is 2. The price over here is 1 where they're selling. But the buyers are buying at the same price. So the price is being suppressed between this level and this level that is constantly trending lower, up until we can see that it's getting squeezed into this triangle. So this descending triangle is now formed, and it gets this name because it is a triangle that is getting lower. The price is descending, it's getting lower. Compared to an ascending triangle, ascending meaning getting higher, this is descending meaning getting lower. Price is getting lower, even though it's being held over here at the same level. So what we're going to want to do is we're going to want to notice this, and we're going to slap a line over here to measure this move. So once we see this happening, we understand that it's a triangle, and triangles could break out either way. This triangle can go this way. This triangle can also go this way. But the chances are higher that this triangle breaks lower. So once we see this forming, what we should do is measure this move from this support down here up to the highest point that it had throughout this whole formation. And that's the move we should expect if we get this break lower. Now again, I'm not saying it's 100% guaranteed that this move is going to go lower, but the chances are that this thing goes lower rather than it going higher after this price action. And if you just think about it, what's the psychology behind the price action? The buyers are at the same price, but the sellers are pressing the price lower. So if you just think about it in terms of that, then you'll notice that the sellers are sort of are a bit more aggressive than the buyers, because if the buyers were more aggressive, then they wouldn't wait till it comes back down here to buy. Maybe they'll buy it up here. Maybe they'll buy it up here. Maybe the price should be trending something like this. That's where you see, okay, buyers and sellers are stepping in. Over here, buyers are only interested at $1. Compared to over here, okay, buyers are selling, sellers are selling over here. They're selling over here. They're selling over here. They're selling over here. It's constantly selling, which is why we see this downwards trend. So once we know that measured move, what we're going to do is wait for this break over here. Again, what do we want to see? We want to see a candle that breaks, not only breaks, but breaks and closes below this support over here. So we had the support over here. Look how many times it broke this support actually. If we look. Okay, here it held it. Over here it broke, but we didn't have a candle that closed below it. Over here it broke again, but this candle did not close below it. Over here it broke. Over here it broke. We don't want to see that. What we want to see is this, and we want to wait for the candle to close below here. Because over here, we know the buyers are stepping in around $1. They could be stepping in at 98 cents. They could be stepping in slightly lower. So what we want to do is wait till we see something like this. Once we see this candle closes over here, and another thing is that not only do you want to look at the price action when you're trading these things, in the future videos, I'm going to get into more things, indicators, volume, things like that, float. Where's the money coming? Where's the money going? Where are the buyers sitting? Where are the sellers sitting? You want to see increased volume on this. So if you see it's light buyers, light buyers, light buyers, light buyers, and light sellers, then just maybe the same amount of buyers might step in, or a little bit more, just to send it back up. So what you want to see is eventually you will learn things like volume and things like that, where you'll be able to sort of piece together the puzzle and have a better idea, a better picture, more conviction of the trade, because there are more indicators telling you that this is pointing in the downwards direction. But solely looking at this, we see that over here, this is a strong sign that this support is broken and the price might trend lower. So once we get that, what we want to do is wait and see. Here's the thing about this. This is just like the ascending triangle. If you watch that video, we spoke about there being different entries. And the entries are going to be based off of your trading style, your risk tolerance, the way you like to trade. So here is one entry. One entry can be once it breaks and closes below this trend, this support over here. Personally, I don't like this because, like I explained in the other video, market makers can see where orders are lined up. So if they see a lot of sellers stepping in over here, what they can do is buy it up, because they know a lot of people are willing to sell right here just to send it back higher. So what I like to wait for is, this is one option. This is some people how they like to enter. What I like to enter is waiting for something like this. I would like to see a break of the trend support and then a retest to confirm that this support over here is now resistance. So we see it held. Stock is holding, meaning it's support. It broke over here, but let's see if this bounces back up and goes back up and acts as support now. But in this case, it is not. It retested it over here and it's rejecting over here. So I would see that as a sign where I would like to enter a short trade, because this seems like it is going to continue to sell off. Now, another way some people like to trade this is they like to enter once it breaks this low over here. So why this low is because, well, we had the support over here. It broke this support and the price reached all the way down here. A little buyer stepped in, pushed it up here. What people want to see is a follow through, a continuation. They want to see this previous low taken out. And once they see that, as soon as that is taken out, they assume that the price will continue lower, which it probably will. So a lot of people like to wait for that, just as a higher form of confirmation. Again, I personally like this one, entering over here. I feel like this is solid enough for me, and I know that I'll be able to cut the trade if this thing does go against. Which you should always have that possibility in mind, because you shouldn't get into a trade assuming and only having the bias that this is going to play out in your way. That is not how you're supposed to trade. So at any given point, any trade you put on, any trade anybody puts on, I don't care if you bring me Warren Buffett, I don't care if you bring me a top trader at Goldman Sachs, at any given point, any trade that put on implies there is risk. And that is implying that the trade can go wrong at any given point. And that is just the markets and life in general, which we'll get into also in one of the future videos. Things outside of technical analysis that any trader should know. But getting back to the video, that was an entry over here. This is an entry over here. And then the other entry we spoke about is the continuation, the follow through over here. And what would you do in that case is, once you get in, whether it's here, here, or here, you would ride this wave. You already measured this move. The measured move over here is the same as over here. Now, a lot of times, well, sometimes it might not have this full measured move. Sometimes it might go halfway and it might hold over there. So you want to, again, use what you learn. So you want to see if buyers are starting to step in over here and it didn't have its full measured move. If aggressive buyers are stepping in, then maybe you should think, take some off, size down a little bit, reduce the risk. Maybe enough buyers are going to come in to eventually send this higher. Maybe this is going to switch up. Maybe it comes like this, comes down like this, comes like this one more time, and boom, the pattern all of a sudden changed over here. It just looks like an inverse head and shoulders all of a sudden. So again, this is the expected move. This is what we should expect. So while we're in the trade, you still need to watch. You can't just put a sell order over here and walk away and go have lunch. You don't know what's going to happen. This can switch up at any given point. But again, this is the move we should expect. And we just trade it as we go. If we see aggressive buying is coming in, if we see something switched up, if we see certain data came out, if we see news came out, if we see the market sentiment switched up, we'll be able to adjust according to what is going on. So that's all for this video. Thank you again for watching, and I hope to see you in the future videos.